Hey everybody, so today I wanted to do a market overview and I really wanted to talk about some of the economic data that's going on, some of the dates that we have to look out for in the future, and just kind of oil prices and just the state of inflation. So, if you did watch my weekend overview video, I talked about how GDP is likely going to come in negative for Q1, and no surprise here, negative 1.6%. So this means that GDP has actually gone down and the economy is contracting. So not a good sign, especially if we have two consecutive periods of negative GDP. So that's going to be horrible, and I'll tell you the date for that in a little bit further along this video. So I thought it'd be interesting if I go on Google Trends and look up recession. As you guys can see, we kind of peaked out right here on June 12th through June 18th. Now, this was right around the time that we had that CPI print, which was a couple days before. And basically, after that CPI print, everybody was saying, oh, recession this, recession that. And we hit this peak. So we'll see, do we go back and we have high trend data on recession search terms going in the future? Because that could happen if we do have another bad CPI print. Now, I want to look at this little interesting little picture we have here. So this is just talking about July 4th barbecue breakdown. Now, I thought this was interesting. So hamburger buns, bread prices are up 8.7% this year. So we're going to be paying more on hamburger buns. Cheese, higher milk prices due to increased costs for cattle and animal feed. And that's going to be up 8.7% this year. Chicken. So chicken is up 17.4% this year. And I don't know about you guys, but I like eating chicken thighs because it's much cheaper. Chicken breast, chicken wings, those cost like three, four times more. I'm not interested in that. So the reason why chicken price is higher is because we have avian influenza, which affected more than 40 million birds. And right here on watermelons, we have 8.5% over the last year. And this is because of higher fuel prices and just transporting it from farm to store. Corn on the cob, this is because of fertilizer, 6.4% increase. Chips, so it says 13.6% increase due to variety of cost increases to the inputs. Now, my guess would be sunflower oil just because like I saw that Ukraine and Russia make up like 80% of the entire sunflower oil market. Now, burgers, ground beef went up 13.6% since 2021, and this is because of rising input costs and smaller than normal herd sizes. So I thought this was interesting. I don't know about you guys, but this is pretty interesting. We're going to be paying more for 4th of July. And don't even get me started on propane cost. So now we're going to talk about gasoline prices. So if we're looking at gasoline prices, I was predicting pretty poor CPI for May, and that's because I was looking at gasoline prices. And if we look at gasoline prices in May, they went up quite a bit, but here in June, it's even higher than in May. Now we finally had this little inflection point, but we'll see if this lasts. I mean, I did see something interesting as well right here on the oil inventories. We actually saw that the inventories actually ticked up a little bit. So is this just like a one-off thing or does this continue to tick up? So here you guys can see it's been going down, 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 up. So I thought that was interesting and I'm gonna definitely keep track of this every week. Now, here is kind of where I get a little bit scared, you guys. So let's just look at July 25th. We got Tesla earnings. July 26th, we got Apple, Microsoft, Google, Visa. So there is a lot of earnings on this week of July 25th. Now, here's what's going to make this week so much more scary. I am on the BEA website and they're telling us the next release of the GDP, the preliminary GDP for Q2. This is going to be the most important. It's going to come out July 28th. That's going to be at 8:30 a.m. EDT. Here's something else that's scary. Interest rate decisions. July 27th. What else is scary? FOMC meeting. So during this FOMC meeting, which is going to be July 26th through 27th, they're going to come up with that interest rate. Now, let's just talk about some of the things that some of the Fed chairs have said. So Mester is rooting for 0.75%. Williams is saying, hey, you know what, we might get zero point 0.5 to 0.75. Daly is saying 0.75. Powell recently said that he'd rather tank the economy and put it into a recession than have lasting inflation. So to me, all the news is just so bearish. Now let's just get into the charts. I'm kind of going to zip through the charts because, I didn't see a whole lot happening. So if I'm looking at SPY, the one thing I do want to know, if you guys don't have this line drawn on your charts, make sure you have it drawn because as you guys can see, bounce, bounce, bounce. Oh, bull trap, bear trap, bull trap, bear trap, bounce. So this line is clearly very important, you guys. And, we're actually not too far away from it. So, if we do fade again, maybe expect the bounce here again. Maybe expect to cut lower because last time they tried tricking some bulls. I'm sure bulls probably got some calls right here. And then this happened. They're like, oh, crap. And then they sold their calls. And then bears were like, oh, yes. And then this happened. And they're like, oh, crap. And then they sold their puts. So, things are getting a little bit hairy around this area. So do watch out. Maybe we cut underneath. Maybe we rally again. See what happens. But thus far, lower highs. So that's never a good sign. Are we going to see lower lows? That's the most important thing. If we cut underneath that, it's a lower low. If we stop right here and then we rebound, well, then that's actually a higher low. So that might actually be an interesting development. Now, let's just kind of look at this 1 month time frame. Actually, let's go on this 5-day. So on this 5-day, we had this big gap down today. Now, this is kind of when I sold all my puts. I was like, I'm going to sell my IWM puts. I'm going to sell my TAN puts. And, just because of the magnitude of which we fell, I just didn't feel like, I just really didn't feel like we're going to fall more. So I did end up selling those puts. And we did actually rally a little bit. So I was kind of interested that actually happened. I wasn't expecting this kind of rally. I was expecting maybe a little bit more sideways. But, I guess it's not that surprising because we did fill this gap. We gapped down, went back to fill this gap, went a little bit over, and then we actually faded again. So not all that interesting, but interesting to me. Keep in mind we do have this gap all the way down here at 367.12. Qs, same thing. Make sure you have this line drawn. And then if you look at this candlestick, it's a doji. So we actually don't have a whole lot more to fall if we do want to hit this trend line. So definitely don't get too bearish around here. Don't get too bearish because this has proven to be a strong point to bounce off of. Now we do still have lower highs, lower lows. Doesn't look too good, you guys. But yeah, like I said, don't get too bearish around here, especially if it's like an accelerated sell-off. Now, the crazy thing is that, if we do have those accelerated sell-offs, one of these days, this line is going to break and we're going to have that strong sell-off. Now, don't be buying calls if we're close to earnings and we're close to that week that I mentioned, that July 25th, because technicals are going to go right out the window, especially with all those earnings that are coming. So don't expect us to bounce right off this level perfectly on a week of earnings and GDP. That is when, we could see some of the craziest stuff. So don't get too risk on to the upside during that week. Now let's just take a look at these shorter time frames. Same thing, we had this gap down, strong sell-off, strong rally, filled that gap, and then faded. DIA, let's look at DIA. Same deal, gap down, rally, fade. Now, DIA does have the same trend line going on here, but I do believe that there is a little bit more downside to DIA than these other ETFs. Microsoft, I thought this was interesting. So I have this trend line drawn right here. You can see that we bounced off it plenty of times. Look where we bounced off. So as you guys can see, perfect bounce right here. Bounce, 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 and bounce. So if we break underneath this, that's going to be pretty ugly for the markets. Apple, let's look at Apple. Let's go on the shorter time frame. So on Apple, we actually didn't fill this gap. So I'm actually surprised that this didn't happen. So you guys can see we had the strong gap down. We tried rallying, didn't quite make it, but we're pretty darn close, like about 50 cents off. Now, if I am looking at Apple, if we do continue to sell off, I would say that, this 133 area could be a stronger support, but we could always go back down to fill this gap at 132. Tesla. So with Tesla, I've been warning you guys on Tesla for a little bit that we had this massive gap down here. And look what happened. We actually had something like, we almost came down and filled this gap entirely, but we didn't. And if you do see, this was a pretty strong rally right there. Very strong. And then now we have something that's kind of like a double top right here. So we'll see. I mean, we did leave this tiny little gap right here. It's about a $3.37 gap. I mean, maybe we could fill it, maybe not. But just keep in mind that we didn't completely fill this gap right here, as you guys can see. And lastly, the VIX. So, this is kind of what makes me not want to get too bearish right now, because I'm expecting the VIX to just fall down to this trend line. Then that's going to give us that clear sign, okay, maybe we could be a little bit more bearish, because this will be a pretty strong area of VIX support. As you guys can see, bounce, bounce, bounce. So do we bounce again right here? Do we fade, bounce again? Or what are we doing right here? I mean, this is just a lot of chop. I mean, it's not really going anywhere. So VIX kind of looks indecisive right now. Yep, been decisive. So what I would like to see, and kind of where I might get a little bit more bearish, is if we rally a little bit more, VIX fades, and then we fall down to this 26.66 level-ish, maybe right around here. So that's kind of where I might get a little bit more bearish and say, okay, I think I need some protection. VIX is likely going to rally off these levels. So before I end this video, I do just want to say 4th of July, we are closed on the markets, but the futures will be open. So keep in mind the last time futures were open for Juneteenth, that we had this rally Sunday on the futures market. We also had a rally Monday on the futures market. So that exact same thing could happen again. So don't get too bearish or don't get too bullish, and don't be holding, really, really expensive options over the weekend, because you really don't know what kind of news is going to come out over these long weekends. So I hope this video was helpful, you guys, and have a great one.